Welcome back, everyone. Is Google dead? Now that search is under pressure, is Google done? Or is it the right time to buy it because YouTube is a success story, even making more profits than Netflix, leading the streaming world? Cloud is growing. Waymo is coming up as a new thing that nobody had ever actually waited for, right? But it's here. So let's look into Google. It might be that it's dead, like everybody's saying, and it might be that it's a 3x opportunity from here with low risk and pretty good upside. Let's look exactly at the risks, at the upside. Let's see what is going on with Google. I always start my fundamental analysis with a use case. Who is it for? What is it for? So who is a typical client of Google? And my thesis is all around cloud. So I don't care about Waymo. I like YouTube as a business, but my main thesis is on cloud. Okay, I would buy Google just for YouTube and cloud. So we will look at cloud right now. Who is a typical user? It's a company called Spotify. And by the way, an amazing company that is going to stay there for the next 10 years. They're going to spend with Google. Why? They use the cloud infrastructure to handle billions of daily music streams across 79 markets. Now, how many options do they have across 79 markets? They leverage the automated data pipeline. And what is more important if you are Spotify than an automated data pipeline and the according analytics to manage 100 plus petabytes of data and 20,000 daily job execution in an automated way. You know what that means? That's cost reduction. So let's look at the ROI for Spotify. Why don't they move over? Why don't they do it themselves? Because there is a 300% increase in computing efficiency by using the Google Cloud. There's billions of daily plays supported seamlessly, no friction. And this is what businesses pay for. 50% cost reduction in operational expenses by eliminating the data center maintenance. You do my data centers, I can do what I can do best. 20,000 automated daily jobs, freeing up engineers so that now the engineers can work on the big bucks, on product innovation for Spotify, on user experience, on UI, UX, which is more important than if those engineers would be, taking care of some bugs and some fires that pop up because the opposite is happening than a seamless integration across end-to-end processes. So the use case, who is it for? It's for the Spotifys of this world. What does it do? It creates a lot of seamless execution for them, and it decreases costs for them. So now it's clear who is it for and what is it for. ROIC. And by the way, I get your questions around, yes, Simon, but now that search is under attack, will this still be the case? Yes. So my case is I expect a weakening in search, which did not happen yet, by the way, but I see it in my own behavior, in my friends and clients' behavior. So I expect at some point search to be declining, to be growing slower, still to be there, but maybe not in the monopolistic position. So without the search monopoly, we just look at cloud and YouTube with this valuation to define if we want to own it, okay? And how much it can perform if it's in your portfolio. Is it profitable? Well, it is the most profitable company on the planet. In terms of billions net profit per month and per quarter, there is no company that creates more profits every month and every quarter than Alphabet right now. It's very profitable at 32%. Can it keep it up? Yes, absolutely, and even more, because it will be more and more automated. It's an algorithm-driven business already, but it will be even more. So can it, and the tendency, by the way, is up in a 45 degrees angle, which is beautiful to see. So the future is bright for profitability, but can it grow? And by the way, guys, you don't have to wait until I make this video. I share my real-time trades the moment I make them. And so I shared when I bought Google in the Sprints Club, which was, of course, at a better price than it is right now. So if you want to be even earlier and get this information, make sure you join the Sprint Club at strategysprints.com. Now, we want it to grow above 15%. This one currently grows at 12%. So Simon, why is it in your portfolio if it's not growing above 15%? That's a good question, and one that I discuss all the time with myself and with my AIs and with my partners. The point is, sometimes it's fine for us if you are below 15%, when we see a trend and we see a clear path to become above 15% soon. And this is the path that I see. First of all, search is still growing 10% even after all the competition. It might decline, but it's not happening yet. So I expect it to decline. YouTube is growing at 9% a clip and is the #1 streaming business. It's creating more profits than Netflix. And I expect it to increase. And then there is cloud, which I expect to accelerate. Now, Gemini is really, really progressing well. It's the best performing model. They have the biggest account base of current users. So if they just get it half right, this will be above 15% very soon. I expect by the end of 2025, the Google growth to be at around 15% again, and then 26 to be above 15%. That's my expectation, and that's why I bought Google, which would bring growth overall where we want it to be. So maybe you shouldn't invest in Google. It's your decision because it's below 15% growth. Maybe that's exactly the moment when you want to invest in Google, like I did, because this is when everybody's giving up and they just buy Nvidia because it's growing faster. But they don't think long term. I think in 5 years, it's much better to own this company. Network effects. Yes, it's the OG of network effects. You have the YouTube creators, you have the companies who use the cloud for all their work related things, emails, calendars, Google Docs, spreadsheets. You have ads. There's a whole industry running Google ads. You have search. We looked at the Google ads versus the other ads and independent ads on the trading desk video. By the way, check out the trade desk video if you want to understand the ads world better and who the players are in there. Loyalty. Yes, if you are an organization that's using the Google Cloud, you have your workflows, your data, your ads data, your collaboration with your colleagues and vendors built around Gmail, Drive, Docs, and spreadsheets. So high switching costs, you don't want to move that. And you would need a 10x better offer to move or a crisis to move. And YouTube creators, they have built their audience on YouTube. They don't want to move. They want to monetize and stay monetized and stay loyal. They would only move if they have to move. And then the IP, that's the weakest link. I think patents are super vulnerable because in technology, patents cannot be defended. But algorithm superiority, we don't need to talk much about that, right? The OGs of algorithm, and it's 30 plus years that they are in AI. So strengths, network effects mode with 92% of search market share. Still, it might decline to 80% this year, maybe to 70% next year. We're not seeing it yet happening, but okay, let's expect a decline there. But right now it's a strength. 307 billion in revenue. AI leadership with Gemini and YouTube and Android. Weaknesses: 75% revenue dependence on advertising, trailing in cloud. Opportunities: AI revolution with Gemini, plus cloud computing growth, which I bet on, plus an additional nice to have, which is Waymo. I don't bet on that. I don't really care about Waymo, but that's another additional opportunity if you want. And then the threats, a ton. We have competition, you have antitrust breakup risks, you have regulations limiting the data usage, etc., etc., etc. So there is a ton of threats out there, which is why the price is so interesting right now. Because otherwise, it would be a monopolistic company with that cash flow and with that profitability. You would never get it at a reasonable price. So this might be the moment to buy what we call a dislocated, high quality company the moment it's dislocated, because otherwise you never get an entry price with a proper buffer, with a proper safety. It's the most profitable company on earth. So my thesis and why I bought, it's the most profitable company on earth. It has the ultimate data moat, and it's monetizing the human attention at global scale. Will human attention be less valuable in 10 years? Nope. Will AI do it completely without Google? I don't think so. So my money is actually on Google. It's one of my 13 companies that I own. Right now, we entered in the 160s, but it's still an interesting company. So even if you weren't in the Sprint Club and were earlier in there, right now at 178, it's still, there is a margin of safety in there, I would say. And this is very contrarian to what you hear out there. But I would say right now on Google, there is a margin of safety. It's one of the better high quality investments that you can do right now, because according to our DCF, its fair value, it's at 237 as of June 2025. Price is at 178. So that's your margin of safety right there if you want to join Google right now. It's not the fastest growing company on the planet, but it's a reliable compounder that has proven its efficacy and its use case in the market decades ago. So Sprint Club members, they get the real-time alerts and they can be in there even earlier. Also, they get access to my daily income portfolio, because this portfolio, or compounding portfolio, will make you money in 20 years. But the income portfolio makes you money this month. And many of you want that cash flow right now in addition to the long-term 20-year compounding portfolio. So if you're interested in that, join us for free 7 days. I'm sharing the live trades from the income portfolio. It made $9,000 this month, and it made $14,000 in income last month. So we can expect between $9,000 and $14,000 every month from a relatively small account, 150K. And I'm doing this live in real time. Happy to help you build up your income portfolio. See you on the other side, everyone. Keep rolling.